Yeah, we can go ahead and get it started. So I was just saying earlier, thanks guys for joining in. And prior to diving in right into the numbers, maybe we can just, for someone who joined, maybe hearing about this company for the first time, I was wondering maybe, I know Brad just did an amazing thread and overview of the entire company. Maybe you can just like take like 60 seconds to give us an overview of this company, what it does, what industry it operates.
Sure thing.
Just a quick
Sure thing.
introduction.
So Trade Desk is disrupting what's called the upfront advertising system. So where these advertisers have to purchase large blocks of impressions months in advance in order to generate impressions and have a campaign. So what Trade Desk is doing is moving that kind of upfront system into a more what it's called. It calls it a programmatic advertising format, where it's essentially enabling real time quantification of per each impression, so that they're aggregating all of this demand. They don't own this. They're aggregating all of the supply. They don't actually own it, but they're aggregating all of the supply and helping advertisers to make more informed decisions on what each impression is worth, and helping them to bid on each impression to eliminate all these wastes and inefficiencies that are really inherent in the upfront system. So that's really the overarching mission of Trade Desk. And maybe Jordy or Chris, if you want to add anything.
Well, yeah, I think that was a pretty good summary. Maybe just one more thing. I mean, Jeff Green is the inventor actually of the ad exchange. So he built the very first one. Ad ECN it was called. I think it was 2002 or 2003, and it was bought by Microsoft in 2007. But they screwed it up. And Jeff Green worked there at Microsoft, and he met Dave Pickles there, and together they wanted something better, second generation ad exchange, and then they built the Trade Desk. So I have to think of, what if Steve Jobs had not just made the iPhone, but was also the inventor of the very first mobile phone. That's a bit how I feel about Jeff Green. Of course, it's a bit different than that's way that an iPhone has a much broader consumer appeal, but still.
Yeah, all good points, guys. And maybe Jordy, you can tell us what are some of the trends that you see in the industry overall, ed tech.
Yeah, happy to. I think Brad and Chris covered at a high level what the Trade Desk mission and function is within the ecosystem very eloquently. When it comes to current trends in the space, I think you can see the excitement in Jeff Green's tone throughout this call. It was a little more, there's just more energy, more good vibes on this one in particular. And that's because we're kind of at a really interesting inflection point in the space. I kind of akin it to like the Renaissance period, where walled gardens and data were very much controlled by Goliaths in the space, and with that there was an impediment to the manner in which the broader open internet could actually function. But now, with what's happening currently from 2020 through 2021, is a few things. The change in identity as a whole, the future of identity, and how advertisers are targeting users across the open internet, as well as how those users are actually being pinpointed, let's call it, within the ecosystem itself. Another one is CTV, connected television, a trend that we're all likely very familiar with if you're here on FinTwit and listening to the spaces. Some other ones as well, particularly with e-commerce and just overall programmatic as a whole. In that 10 to 8 period time frame that Chris alluded to, from inception of what was the first exchange to the advent of the Trade Desk to now what it is known as today, programmatic went through several shifts where it was actually initially remnant inventory. Publishers were kind of in this upfront model still having a lag of impressions that were unsold, and it became waste, and it became opportunities that advertisers were missing out on and publishers were unable to monetize, and that's revenue on the table. Programmatic at its first early inception was this remnant distribution network. It then evolved to something more powerful because the value of automation was not only seamless, but the fact that you could become more targeted, make optimizations, and buy on this model in real time versus this slow moving upfront model became very meaningful in advertising. So within that period post remnant, it even had a negative connotation, which actually prevented its real proliferation, let's call it. Within the last several years in particular, programmatic is slowly earning what is a more respected title, not the most important title, because again, it comes down to the value that is highly accurate measuring, highly effective targeting, and real measurable insights, not just on the campaign KPIs like awareness, reach, cost per acquisitions, but soon to be what you can see now with Solimar, actual business outcomes, sales, things like that. So I would say right now, this current point of programmatic is really more in its early truest form than it's historically been known. So I'm very excited for what the future holds. I think we'll see dollars continue to shift, not just in CTV, but other practices as well. And I think programmatic will continue to push the space and potentially own a bulk of, if not the lion's share of all ad spend.
Yeah, I think one of the most discussed topics for the past couple months, probably even more, were this big announcement in the industry from Google. And when we're talking about third-party cookie deprecation and maybe IDFA rules from Apple as well, how do you think they would impact industry in the long term? And what are some of the makers, the current players in the industry trying to make to deal with this change?
Yeah, I can start. I know Brad and I have spoken about this a few times at length, and he's pretty keen on this one also. But the reality is that the main majority of how users were identified across the internet and how targeting had been done was pretty much on cookies and IDFA. IDFA stands for identifier for advertiser, basically what is on an Apple device, their operating system. The other one is cookies, and cookies are basically publisher identifiers that are then passed around the ecosystem in order to track the same user based on their individual viewership habits or content, things like that. With these things going to the wayside and being deprecated or changing for what is privacy regulations, advertisers have to rethink their strategies and their advertising models, and publishers and tech players have to rethink how they actually function as a business. A few players in the space are particularly creating pretty substantial, scalable, viable alternatives. Obviously, the Trade Desk initiated UID2. Others like LiveRamp are pushing their own IDL, which is a combination of ATS publisher identifiers and IDL link. There's others as well. You'll hear about like Live Intent doing hashed emails. Holding companies, agencies themselves are even coming to the table with their own, so they can go to advertisers and say, we know you're going to use other industry ones, but come work with us. We actually have our own proprietary one. In particular, Publicis, you've heard, working in partnership with UID as well. So there's a lot of players in the space trying to come to this, but I would say, context aside, it's incredibly important and necessary for the internet to come together and figure out what is a sufficient identifier. That's also not just, getting the thumbs up and the check of approval, but what's scalable. Again, it comes down to why advertisers are even shifting from linear to connected television. I need to be able to get scale. I'm not trying to reach 5 people, 10 people, hundreds of people. I need hundreds and thousands of individuals, my existing loyal customers, and these net new prospects who will continue to help my business grow. And without an identifier to do so, programmatic really loses its weight and its advantages. So the Trade Desk really trying to move forward with UID2 and even further losing grasp of it. I think that was incredibly strategic and intelligent to say, we're clearly a crucial part of this entity, but we're not going to be creating a new walled garden. We're not going to take exclusive rights to this. Whoever wants to adopt it, we advocate for that. We want to help you. We want to propel it further. It's brilliant. And they're not relying on it just to be for them. Others are open to adopt it. And like I said, you see it as well, not just with the holding companies, but other players too.
Yeah, and I would just add, I agree that it's absolutely brilliant that they're keeping it open, because this idea of scale is so absolutely important and vital when Google is making the decision to eventually deprecate cookies. Now that's been delayed by 2 years. Jeff Green thinks it's going to be delayed further, but the Trade Desk maintains its value proposition and maintains its lead on ROI if it can aggregate all this scale into one place and kind of be this bigger David against Google's Goliath. So that's why people ask me a lot, why don't you own some of the smaller ad tech plays, which they all seem like really cool companies. But the main moat, I hate using that term, but I'll use it here. The main moat that Trade Desk has against Google and Apple creating these changes is the massive open internet scale that it's already obtained. So good point there, Jordy.
Yeah, and even further, it's kind of hilarious that when Google mentioned that, we're pushing back this deadline of this cookie situation, the adoption of UID continued to expand and accelerate even further. They called it out on the earnings call. It's not like we have more time. We're going to continue to rely on cookies and Google's, historical process, or not really process. You get my point, identifier. But everyone's like, you know what? We want to get on with this. We want to find the new identifier. We know it's coming. Let's shift our strategy now. And it's just benefiting the trade desk. And to be honest, it just bodes well for how they're positioning themselves. It's truly brilliant, and it's pretty crazy.
But do you think this change is good for trade desk and their clients, or it just makes an internet a better place altogether and will benefit all of them, maybe including Google in the long term as well?
Go ahead. Go ahead.
No, I've been talking too much. Chris, please.
No, go ahead.
It's interesting. So when it comes to Google, I think it became a necessity for them to kind of like put their hands up finally. Personally, cookies aside, like I'm not one who kind of feels the big brother effect. I'm in advertising myself. I understand the methods behind it. From the vantage point I have and the stance that I have, I feel like it has its value prop. It can be annoying at times, it can be intrusive at times, but it's not like cybersecurity-esque hacking. That being said, there's a lot of outcrying for a change. There is that obvious, someone's following me, it's becoming intrusive enough where it's warranting change, and Google has to do so at this point. Clearly, they're trying their best. The irony here is if you look at recent updates, they actually did a test with Criteo, another long-term name with a great reputation, very active in the space, and it seems like they're not even getting the scale they initially anticipated. It is only early days. I imagine Google will continue to put capital and human capital behind it to get it to something more substantive than where current numbers are. And I can look to post the article later on again. But there was a recent report where they're showing Criteo's partnership with Flock, Google's attempt here, Flock and Fledge, et cetera. And it's just not currently living up to the hype. And it just shows that it's really not an easy concept. That's why it also takes an open internet, which is very much, again, the trade desk marching cry.
Yeah, that's what I wanted to add as well. I mean, if you look at the trade desk, they are the objective guy, and they say that, or they said that on the earnings call as well. We are objective, and that was also meant against Roku. They say, we don't have content, we don't push content forward that we aggregate, etc. And that's on purpose. We want to stay objective, and that's great. I mean, then I have both because I'm a Roku shareholder as well. But yeah, I can see their point there. And if you look at what I think will become one of the greatest advantages of the trade desk is that they are more than the walled garden. They are the open internet, and that means that they can also measure how the return on investment will be of your ad, comparing all different platforms, including platforms which Google and Facebook don't have, Spotify ad, for example. So I think if you can see your return on investment across different platforms, that's a huge competitive advantage that is not stressed enough.
Yeah, and Jordy, I just want to add to that again because it's another great point, and unsurprisingly, but Jordy covered this a little bit. But Solimar allowing for this measurement tool where gigantic retailers can see where an incremental dollar of ad spend translated into this sale or that sale. That's why they just signed on Walmart and Home Depot and the international Uber that I can't remember the name of, Gojek or something like that. Yep. Perfect. I remembered it. Awesome. Go Brad. But just two quotes that I want to highlight to just kind of give context behind the importance of UID2, at least in the eyes of Jeff Green. And he is a bit charismatic, but he's delivered amazing results for a decade, so he deserves to be charismatic. So here it is. UID2 will be a currency the advertising world will have to accept, much like a retailer accepts Visa. So he's really, the momentum that they're seeing behind this and that he wasn't really expecting to see, that he tells us every single quarter exceeding expectations. And yeah, he's going to say that, but still, it is kind of beyond the wildest dreams that the team has had. Just another kind of third party quote to get away from the hometown cheerleader. I've been positively surprised by the advancements the Trade Desk has made versus digital platforms. Their focus on advertiser needs for advanced targeting and inventory management are setting them apart from YouTube and the rest of the marketplace. That's Mondelez's VP of Consumer Experience, John Halverson, on the earnings call. So I agree with Chris and with Jordy that this is creating kind of a walled garden for the open internet almost. And I shouldn't say that, but I will, because it's giving these open internet players the advantages that they haven't been able to realize that the walled gardens themselves have been able to hold over them. Trade Desk is kind of moving or smoothing over those pain points so that these open internet players can aggregate and behave in a way that's effectively the same as these really successful, lucrative walled gardens.
Yeah, and I think, the big dream of advertisement has always been to measure, and the best measurement will always remain a sale. And with the Trade Desk now integrating those platforms, the data platforms, the data itself of Walmart and Home Depot and Gojek, and I think that those kind of partnerships will keep growing and expanding. I mean, that comes closer and closer, that you can really measure, how much more do I have to spend on advertising to have the optimal, sales return. So, I mean, that's something for advertisers that they have probably dreamt about that for 50 years or so, and that's coming closer.
Yeah, and I think, all points were super brilliant, so appreciate you guys covering that stuff. It kind of leads me to the reality that we also haven't discussed what those retail partnerships really also enable from a new potential TAM. The reality is that these are businesses coming to the Trade Desk and saying, we have data, you potentially have supply. Walmart, if you go to their website, they're selling banner ads alongside products, targeting across their own micro ecosystem. And now they're plugging into the Trade Desk and saying, hey, we want, if P&G is selling, I can't recall a specific product off my head, a paper goods product on our store, and we want to help let them know that every time someone purchases one, it's due to their advertising. Walmart's going to lean into that. Home Depot is going to lean into that. And everyone's curious about how they could not only continue to grow within the US, but expand internationally. Gojek is just further proof that they're clearly keeping that target in mind to expand internationally and do so strategically. It's no longer just about finding advertisers overseas. It's finding partnerships in a new manner that will likely drive greater revenue and create a network effect among retailers to further promote this digital e-commerce measurement effectiveness. And it's really something cool that is very unique to the space. And it's very early on for them to be pushing it and to see such quick action already. It's pretty cool. So I'm definitely going to continue to see what other partnerships they strike up in that regard and how they effectively monetize them.
What are your thoughts about that Walmart having launching a new DSP? Is it something new, and do you think it's gonna keep happening for larger clients of Trade Desk? What are your thoughts about this?
Yeah, that's what the partnership really entails. Where Trade Desk is allowing Walmart to monetize and understand its ad inventory a little bit better. So yeah, that's the main part of the partnership, is my understanding. Jordy, feel free to correct me, or Chris. But Trade Desk is taking its typical 15% platform cut for Walmart getting access to their software. So it should kind of behave pretty similarly to some of their other clients, except they're building out a separate platform for Walmart specifically.
Yeah, it's likely a white label DSP, but it basically empowers Walmart to have an ad sales team, and it doesn't deter from the Trade Desk's value. I think people know that. I know that people are not going away from the Trade Desk just to use Walmart's DSP. Candidly, working within the space, honestly, buyers often use multiple DSPs. If you're going to buy YouTube, you know that Google's targeting is going to be more effective on Google's DSP So you're going to use DB360, but you're also going to want to access the rest of the open internet. And quite often, the leader is chosen in that regard, and the Trade Desk is pretty much the leader there. There are similar instances as well where one DSP might have something unique that they're touting and they're getting tested. It's not common practice always to have multiple, but it's definitely not unheard of. So again, if I'm, same example before, P&G, and I'm an agency or I'm the brand directly, I could likely leverage both and happily get access to the open internet and get that incremental scale and drive people over the wider ecosystem. And then again, if I have products being sold in Walmart, I'm going to use that DSP if I need to, if it adds value. But the traders are also getting percentages there. So again, it just strengthens their value. Again, many retailers will likely want to create something of this. So I think it just compounds the value that they offer.
Yeah, that's what I wanted to say. I think this whole space will be completely unscaled. It's a term that I often use because you see it in everything. And the more DSPs that use a Trade Desk's platform, the better. It becomes some sort of app store in that way. Very complicated and advanced sort of app store, of course. But the Trade Desk takes its cut, and for the rest, it doesn't have to do that much. So I think it's exciting to see that happen.
Yeah, I was just trying to figure out if there is because I was pretty surprised to find out that they having this special project specifically for Walmart, because I personally didn't hear anything of this nature in the past, because I'm just used to that all the clients are using Trade Desk DSP as opposed to Trade Desk is building a separate one. So just trying to figure out if there's a trend they're going to see in the industry and how it's going to play out. Maybe a lot of large players from different industries will be doing this as well and just utilizing Trade Desk technology. They're just my thought process. I don't know. Maybe I'm wrong.
I think you're right. I if I had to guess, and I do have to guess because the management team hasn't told us this yet, but I would think they're building a dedicated product for Home Depot as well, just because of how massive Home Depot is in our country. But I would think, or I forgot where I was going with that. I would think that, I'll just leave it there. That they continue to build platforms for these gigantic retailers, but they haven't told us yet where they're going. So we'll have to learn more in future quarters. But I think, and I think Jordy and Chris agree that Walmart's going to be the first domino of a very long trend going forward.
Yeah, perfectly said. I agree. I mean, I think it's, again, that network effect. The more that these retailers see the value that the Trade Desk's custom DSP platform and data ingestion is enabling other buyers to come to their site, and now it ensures that they're monetizing all their own supply and ensures that they're driving a direct relationship with buyers. And then again, if there is that ROI metric, there might lead to like other business partnerships. Again, it's just enhancing how they themselves as a business operate within their own clients. And that's very powerful. So like Brad said, and Chris said, it's a domino, and I definitely see it expanding. And I don't think by any means it will hinder the Trade Desk's growth in any capacity.
Yeah, I just thought it's a pretty interesting concept. Well, maybe we can switch from Walmart to more international markets as well. Did you guys hear any of the additional partnerships that they made? Anything in Europe, or I know they've been trying to establish presence in UK as well, and Australia. Did you guys hear anything interesting on that front?
Yeah, we got a lot more color in this quarter on CTV than we ever have, or than I can even remember by far. So for Europe specifically, you talked about a deepening partnership with Sky Media in Europe. So Trade Desk now has access to the majority of all CTV ad impressions across the continent. He also told us that revenue 10x year over year in India and Europe. But remember, these are pretty new markets for Trade Desk. So coming off of a very small base. So it's going to take a very long time for that to actually start contributing meaningful revenue to the Trade Desk. But yeah, just kind of going along with that CTV trend. more broadly, because it was stark how much they actually told us this time. Duvall, who's another really brilliant person in the ad tech world, that was his main beef with Trade Desk when I talked to him, is they don't disclose CTV, and they did this quarter. So Blake Grayson, the CFO, broke down revenue by ad segment for the first time since I can remember, and maybe I'm wrong, but I don't think I am. He said mobile is in the low 40% range of total revenue, and then video, including CTV, is in the high 30% range of total revenue. So now that we have that piece of information, and we have the other piece of generic information they give every single quarter, CTV revenues are doubling year over year, we can kind of get an idea of how big this CTV segment is. So that was, I'm very grateful that they disclosed as much as they did on the CTV front, because again, they really haven't in the past. But another just really stark statistic, or I guess three more stark statistics, bear with me. But so far in 2021, again, this was the first time I've seen them disclose it. Trade Desk clients spending $1 million annually on CTV is doubled year over year. Same thing with over 100,000 on CTV. Their total CTV clients grew 50% year over year to 10,000. These are all new metrics to me. Trade Desk now reaches 87 million households via CTV, which is larger than the maximum possible reach of linear TV. So yeah, we learned a lot more about their CTV business, and for that, Jeff Green, I am thankful.
Yeah, that was very
times,
interesting indeed. And also something else which I hadn't heard before. So that video on demand, so ad supported video on demand, was going to grow from 4.4 billion to 18 billion in 2025 already. So that also says a lot, I think.
Yeah, I think.
Yeah, I remember they were saying on the call that just a few years ago, when it comes to international expansion, they were just planting seeds in Europe. And now we hear the stats like, if I'm not mistaken, that the CTV segment in Europe revenue grew almost like tenfold prior to last year. So that was pretty staggering, and it's just unbelievable.
Yeah, I mean, Chris and Brad covered it. In terms of international, you have movement in Europe with Sky, you have Germany growth, you have India, Xiaomi, entity partnerships, things like that. And I think a lot of it also does have to do with CTV. I mean, the segments and the points that Chris brought up as well, like it just shows that people are underestimating what is currently happening. And this is really not a trend at this point. It's very much a significant movement, in my opinion. I think not only from the stats that are shared from like MoffettNathanson, and the fact that the Trade Desk is just seeing it from $1 million net average clients and $100,000 average clients, things like that. It's also the fact that advertisers are coming to them complaining that like their GRPs are off, their gross rating points are off, their average reach is off in linear-based buys. When they go to the upfronts now, advertisers are requesting programmatic, and the partners and publishers are offering it and almost pushing for it, because they need that additional scale and reach to really have something substantial and substantive. They mentioned auto clients now in terms of like the scale they're getting and the value they're getting from CTV, 51% incremental reach from linear, and a 4x uplift in household reach. That means that you're no longer getting a worthwhile audience in linear alone. It's saying you must be buying CTV. It's pretty insane the rate at which it's changing. And they even called out that in Europe, while there was a slow lag, and we went over this in the Roku call, the US was way ahead of the game, but the trend has moved so quickly here that it's moving just as fast, if not faster, in Europe, because the technology is just expanding there further as well. So I'm just impressed with the reality that the international growth is stellar, and the CTV numbers that Brad mentioned, they were finally sharing added color to, are as impressive as they are. I'm not necessarily surprised. I'm just happy to see it come to full fruition.
Yeah, and don't forget, maybe in a few years we're talking about the same thing in China, because the Trade Desk moved in China a few years ago. Same thing, seeding first, and at a certain moment it will explode as well. And it was at the height of the trade war, and at that moment the Trade Desk went into China, and Jeff Green said, "Oh, but Chinese, they really welcome us because we bring money into the country." That's true, of course. And we won't hear anything from it until it becomes more substantial, and then you hear the same thing, which we hear now in Europe and India. 10x, wow, and the same thing might happen in China in a few years.
Yeah, definitely. I mean, last year they hired a lead to specifically build those relationships and partnerships. They're doing it well. They're not just kind of doing overseas prospecting outreach. They're not only planting the seeds, but they're building a team effectively. And I think you're right. We'll see slow adoption and further because they are very much like an agnostic platform with not a major entity like a walled garden like Google or something that has its own weight behind it. I think they're more likely to accept and allow them to kind of proliferate further than others.
Did you guys hear anything about CTV growth and moves from SVOD to AVOD?
Yeah, that was the number that Chris called out before.
Yeah, and then Green talked about, and he said this in the last few quarters, is AVOD is significantly outpacing the growth of SVOD, which feeds right into the Trade Desk's business model.
Yeah, and I think
maybe just for not everybody knows what SVOD and AVOD is. So AVOD is advertised advertised supported video on demand, and SVOD is subscription video on demand. So Netflix, for example.
And honestly, many people don't understand and grasp that the reason why they have cheap content so readily available, the reason why they can use a massive, endless anthology of data and research called Google search engine, things like that, it's because the internet is ad supported. Otherwise, you'd be paying heavy fees for every access point. That fact alone, in my mind at least, and in those of many tech players in the space, believe that AVOD, ad-supported video on demand, will continue to grow and outweigh SVOD. There will be subscription-based models, of course. People aren't going to completely throw a revenue model to the wayside for those who do want to ignore ads. But for content in this regard, it allows it to be accessed, utilized, and again, even like further created. It pays the bills that allows them to pay content creators to make new movies and shows. So this model in particular is very much how the internet has grown to what it is.
Yeah, and maybe something else, but it pops in my mind now. I saw a graph a year and a half ago, from an independent ad research institution, and it said the optimal mix between premium content, and that's AVOD, and user generated content is about 70-30. And user-generated content is, Facebook and YouTube. And at this moment, it's the other way around. It's 30-70. So 70% goes to, walled gardens. Let's say it, user-generated content. While if you look at the maximum return, it should be the other way around. So I think that's a very important number as well. And advertisers, probably read those researches as well, just like I do.
Yeah, all great numbers and great research. You guys been doing a great job covering this all. And I remember going over that Substack article that Brad posted, and I don't think we covered any of the specific numbers yet. Maybe Brad, you can dive in really quick on the P&L side and the balance sheet side. Anything that stood out to you?
Sure. Yeah. I mean, so top line, 100% growth. We got to remember that we're comping over a really easy period in time where advertising campaigns were sharply pulling back because of the pandemic, but quarter over quarter growth of 27.3%. So that's pretty legitimate. That's pretty strong. 30 or 29 or 30 consecutive quarters. I can't remember if we got to 30 yet, of client retention over 95%. From a margin standpoint, their adjusted EBITDA margin was 42.1%. I mean, that's Fang-like. I said that to a couple people earlier, but I'm repeating that. That is Fang-like. Grayson did tell us that it was partially due to the fact that they pulled back on OpEx due to not having any travel expenses or live event costs, but it still is expected to be in the high 30% range for the year. GAAP operating margin was 22.1%. That inflected positive year over year and improved 18.6% sequentially. Net income margin pretty stable at 31.5%. An interesting note about the guidance: last quarter guidance, it gave. It beat across the board, by the way. It beat the high point of its revenue guidance and adjusted EBITDA and net income across the board. But it gave last quarter, it said, here's a revenue range, and then we're going to go at least, it was like 84 million, I think, in adjusted EBITDA. And this quarter, they flipped it up. So this quarter, their guidance was they're saying at least 282 million in sales and then 100 million approximately in adjusted EBITDA. So some were calling out, and rightfully so, the fact that that sequential growth, I think, represents 1 or 2%. And Jordy was explaining in a different chat that summer is seasonally weak for advertising. So thanks for explaining that. But historically, in the quarters where we've gotten at least guidance, Trade Desk comfortably surpasses it and then some. So I would not be surprised if we got a whole lot more than 282 million in sales next quarter. Just for reference, it beat that at least EBITDA guide by 40%. Now it's harder to beat top lines than it is EBITDA, but still, I think they're setting it up for another fun under promise and over deliver.
Yeah, and I think that's very important to stress. I mean, it's a bit of a hobby horse of me, but the beats really compound. So if you suppose the Trade Desk goes to $10 billion in revenue in 2031, and that's about 27% growth per year, I think. I know it's high, but it may be feasible for such a great company. Now, suppose they beat by just 7%, right? That's 32% on average per year. After 10 years, you get not $10 billion in revenue, but $20 billion. And I think that is not stressed enough how those earnings beats compound over time. And maybe you say, well, 6% doesn't make the cut. 7% is higher, but you have to see how this game is played, right? So each quarter, the company raises its guidance that, let's say, maybe by 3%, 4%, 5%. And then analysts raise their estimates again. And that means that 6% beat of those estimates is actually 10% or 11% or maybe even more if you look at it from a long-term perspective. So that makes a huge difference at the end of the story. So if you invest for the long term, I think, sure, you could argue that the Trade Desk trades at a premium price, but I think it's completely warranted if you look at it from that perspective.
Yeah, I remember Brent was posting or just talking about that Trade Desk has been one of the very few companies that he thinks that are able to grow at that 30-25% CAGR. Am I mistaken, Brad?
No, you're right. And we did have 2020 where 100% revenue growth became expected, but if a company at this scale for a decade can compound above 25%, that's a phenomenal result and will do really well. And I think it can for all the reasons that we've discussed here previously.
Yeah, just add one more thing about financials. I think it was pretty amazing to see how much cash these guys have, and they have absolutely zero data, which gives them freedom to make some interesting moves. I don't know, make any acquisitions that might improve their growth as well and give it a little bit of boost. Do you guys think are there any potential opportunities in the industry from acquisition standpoint?
Well, I think the Trade Desk has done something very, very smart. It has founded some sort of internal venture capital fund named TD7. TD is of course Trade Desk, but 7 refers to the $7 million in VC money that the Trade Desk ever needed to get off the ground and to become profitable. That's compare that to some other companies needing billions and billions and still not being profitable. And we're not looking at you, Uber. So they have already made one investment in I don't know how you pronounce it, Chalice or whatever. Chalice, is it Chalice?
Yeah, I believe so.
And it's a company also in algorithmic ad buying, and maybe that could become an acquisition target at a certain moment. So they are really going that way as well. I think this is the right way to do it, and I really love that approach.
Yeah, and especially I agree, and especially because Trade Desk prides itself on being this independent, unbiased. We don't ever own supply, and we're your ally, so they have to kind of be careful in which parts of the supply chain or the value chain they approach in acquisitions to kind of preserve this independence. So I wholeheartedly agree with Chris. Not to sound like a broken record, but that kind of nursing these really small programmatic demand side ad plays internally, sort of like we see even like a Boeing do, or a lot of blue chips like Goldman Sachs have these VC branches within their company. I agree. I really like the approach.
Yeah, just want to add, Brad. I mean, you agreeing with me never tires.
I'm glad.
Yeah, I have nothing to add. They're on top of everything.
I would just we've been talking about, I don't know, like 45 minutes right now, since we started a little bit later than we planned. And I just hear like how bullish you guys are. I'm just curious, if there's anything that you did not like about this quarter? Is there any potential risks do you see moving forward?
I will start.
Maybe they will have.
Go ahead. Well, I will start. I think, with this company, no. The only real vulnerability that I see is the economy. If something like 2008 or so would happen, or something like the pandemic, that can hurt them. But they're so strong, and they have so many parts that are all moving in the right direction, like a Roman army that crushes the unorganized enemy. That's what I have to think if I see the Trade Desk, and Jeff Green being Caesar there.
Yeah, the only realistic bear case that I see for the Trade Desk right now is it's expensive, and I mean that's my absolute favorite bear case in isolation to have, because these generational compounders always are expensive. So the only thing is, with a 30-something times sales multiple, which again becomes really palatable when they have a 30% net income margin. But just saying, I mean, there's a lot of volatility that coincides with companies with multiples like this. So we all three of us clearly love the company, and I think all three of us would caution that use this volatility to your advantage. And
I'm just curious. You're saying all three of us. So who is the fourth one that does not like this company?
I was saying myself. I don't like the company, because I would never exclude you from my group of three, Max. Never ever.
Just kidding.
But yeah, it will be volatile. I think it will be really successful and fruitful, and I could always be wrong. But yeah, I'll leave it there.
Yeah, I don't necessarily have. I agree with Brad in terms of the true bear case, for my opinion, the fact that it's just valued so highly and is so expensive. In terms of the pandemic, businesses still need to run, and they still need to drive consumers to their sites, and they still need to operate. And we've seen it with the projections that once advertisers adapted to the pandemic and figured out a marketing strategy, the dollars came back just as fast, with this year's projections to outweigh what was 2019's initial estimates. And a lot of that is because of the value proposition that players like the Trade Desk have, and these shifts and trends that we were calling out earlier. So while I believe the pandemic and the economy are definitely something to be mindful of, advertising is something that definitely propels business growth as a whole. So it is a bear argument, but I'm not even as concerned about that in the short term.
Yeah, and then like Chris says, the forward price to sales multiples and forward price to EBITDA multiples don't account for the fact that Trade Desk beats every single quarter. So as he said, those beats compound, and the forward multiples are generally way too high when we look back.
So you guys feeling pretty optimistic about them beating this tough Q3, Q4 comps?
I mean, past results do not. What is it? Past results do not indicate something of future performance. But if there was one company that I would be thinking has a good chance of under promising and over delivering yet again, it would be the company that's been doing it for the last few years consistently, and that's the Trade Desk.
Well, they have been a public company for 20 quarters. They have beaten in every single quarter, both on revenue and earnings per share. So, I mean, I think they could beat in the next 2 quarters as well.
Is it a Q4 2020 when they have the stuff comes because of political ads and everything related with
that was
year?
that's actually going forward to next quarter. So the toughest piece of that will be next quarter, and there will be another large piece of that in Q4. You're right, but Grayson said the guide was for 30.5% growth, and excluding political spend, it was 38%. So yeah, there's definitely an impact from that. Good to bring that up.
Yeah, it's already up to 8 o'clock. So if you guys want to maybe hang around for like 10ish minutes, maybe we can get some of the questions from the audience. If you guys are okay with this, I know it's super late where Chris is right now, so I would appreciate
just 2 a.m.
Not a big deal.
Nah.
You're a permanent resident of this FinTwit space, so your body should be accustomed to this late parties already.
Well, I follow a special scheme for my doctor just for Twit space.
Yeah, guys. So if you any of the listeners have any questions, just request to speak, and I will be more than happy to bring you up and just to take advantage of this super smart guys being available right now.
Jordy, I have a question for you.
Shoot.
So Green we got the 2-year delay from Google cookies phasing out, and Green kind of every time he talks about it, he hints at, I don't really think they're going to be able to do it in 2 years, and I think we're going to continue getting delays like this, and I think it's going to end up being a misstep that they're going to have to kind of pivot from. So I wanted to hear from somebody who's got more not insider, I'm not going to say that because that could get you in trouble, but who has a better sense of the pulse of the industry. I would love to hear what you think of that.
Yeah, I appreciate the correction. There's nothing insider here. In terms of my purview on Google's shift away from cookies and what they'll have to do and their own identity solution, I honestly agree with Green. They've been reluctant to change with the outcry against privacy for some time. Apple has been very bullish and adamant about the fact that it needs to change, and they were the first to do so, and they flipped the switch pretty quickly. I know Google's a little more dependent on it, and that's understandable in that regard, but like I mentioned before, they're still testing it out, and they're talking to other players in the space because unlike what their current practices are, they're going to need to rely on allies. And as a walled garden, that's almost against your model. So they're testing it out. They're trying to scale it out. They do anticipate it to be more effective than these early, examples than these runs that they're doing. But the numbers are pretty abysmal. I mean, they're Google, so I do expect some change. But honestly, I think Green has nailed it. They're going to have to figure something out, and they might have to kind of backstep and develop something more effective. I mean, for all you know, I can't speak. I have no taxiography here. I'm not reading tea leaves. I'm not predicting the future. But for all you know, they need to adopt something like UID or partner with someone else or buy a player who's focused on like sign in, opt in identity and just ingest it into their platform and use that to scale out Flock more effectively. But at their current rate, I do not anticipate a 2-year deadline to be effective.
It's it's incredible. If you look at all the past predictions of Jeff Green, they have always come true. It's really crazy because some were, he said, "Oh, Apple is going to postpone." Well, they did by 5 months or so. He said, "Oh, Google, no way that they are going to phase out cookies so fast." Well, they did, and in the past he has made other projections as well. I can't think of them right now, but it's crazy. This guy has so much insight. He's talking to all the CMOs, chief marketing officers, etc. in the space, and he has so much insight, that he and I always thought, it's a bit dangerous to come out with those predictions, but if you see that, everything that he says come true, I mean, maybe it's not dangerous in his mind. It's just, the natural flow of things, right? And it's one of the things that keeps amazing.
Yeah, I mean, the tower he sits on and the view he has across the ecosystem, due to the mass amount of allies that the trade desk has, it's a very powerful central point of information. And I don't think his comments are, factless, just throwing it out for the sake of hyperbole and shock and awe. I think he generally says it with conviction, and you can hear it in the way he presented earnings today. He was elated, the excitement he has about where the trade desk is moving, and the fact that programmatic is becoming something more substantial in the space. It wasn't an afterthought, but it was definitely that, last end efficiency play. Linear budgets, search budgets. Okay, you got to engage with social a bit. Let's put the rest into digital. Not necessarily in that pecking order, but you can tell that programmatic hasn't received the amount of accolade that it has until recently, where people are understanding there's value to the measurement, to the data, to the highly niche targeting, to the highly granular reporting. That's not a lot of things that are capable in many other categories to that degree with such scale across the entire ecosystem. Not to bring it full circle, but we really are at this incredible inflection point. And I think it's just very prominent with this earnings report that the trade desk is helping steer that ship and helping really drive that momentum for programmatic as a whole.
Every time when I hear about programmatic advertising and all the options that it brings, and then it just seems like there is nothing but pure benefits for every company in this space. It just blows my mind why someone would like to stick with the linear. I just don't get it. Why?
It's like a learning curve. It's like no marketer is going to get fired for testing a Google product. No marketer is going to get fired for running the same thing that ran last year and doing just as well, if not slightly better. It honestly is, as complex as it is for someone to read exhaustive amounts of analysis and industry articles, it is still very complex for people within the space, because linear buying is just very different. You're buying scale and reach than a manual capacity on gross rating points or targeted audience rating points. And it's very different than saying oh, I want to target everyone named Jeffrey with one leg and a red Porsche in this state. That's a bit extreme, but with programmatic, things like that are capable. And it's pretty impressive. And they need to understand that also comes at a cost. Is it more expensive to spend $20 on one individual is highly likely with a great propensity to actually purchase your product? Or do you want to spend $20 on 20 people not knowing what the fuck's going to happen? Sorry for my language. You don't know. And that likelihood people are coming to terms with. Marketers are understanding that, I can be more efficient with every dollar to improve ROI versus just spraying and praying. And it's really becoming something that is a greater topic. And I think linear is creating that conversation, and that will be impactful across other formats as well.
Yeah, and the COVID-19 pandemic, it pulled forward a lot of growth for some companies that may not be super sustainable, but it created what I think is a very sustainable demand shock in the shift from upfront to programmatic, in that it became impossible to forecast, even more impossible than it already is, to forecast demand several weeks in advance. And the upfront model, it requires us to do that. And also CFOs had to be that much more careful with every single ad dollar that they were deploying because of the pandemic upending budgets. And also because programmatic is so much more effective on a per impression basis. I mean, it just really became a no-brainer, and it made it so apparently obvious to people that maybe were still suffering from the tail end of some innovator's dilemma, that they can't just be complacent. They have to, like Jeff Green was saying, they have, this is going to be the current internet currency for the advertising industry of the future, and you can't afford to not be part of it.
Yeah, well, and he shared an example of if I remember well, a big pharma and medical device company. I had to think of Johnson & Johnson, but I'm not sure, of course. That saw 4 times improvement when you looked at the cost per household reach. So I mean, companies are quite sensitive about that.
Yeah, and just thinking about so people will go back to brick and mortar malls and they'll shop on stores too, and that will hurt or eat into some e-commerce demand. But for this shift to programmatic, there's zero reason for CFOs to go back and say, well, we're now going to shift back to the upfront model because the world is normalizing. Because like we're talking about with Trade Desk now offering more reach on its one platform than the entire linear TV ecosystem can offer in the United States, there is absolutely no reason to go back. And now that people were uncomfortably pushed to make this leap, I really don't think it's going to slow down.
Facts.
Yeah, and when you look at the malls, the Trade Desk has even digital boards there as well, so they're in that business as well. So
yeah, they're plugged into digital out of home networks for sure.
Yeah, and it seems like we as consumers will benefit as well because the more targeted, the more cost efficient, and the higher ROI all these ads with programmatic will bring. Maybe we'll see fewer ads as well.
Yeah, I mean, that's also the benefit of CTV versus linear. The average ad slot is 5 minutes and maybe 36 seconds, I believe. While in CTV, it's on average like 2 minutes. So again, less time with advertising, more effective, relevant advertising, and more ROI for businesses. It's very much a win-win-win all around.
Yeah, that's exactly what I was referring to. So
I'm just reiterating your point, man.
yeah. It's I don't really have anything else to add, and I don't have any requests to speak. So I'm trying to be respectful for your time, guys. And if you guys have any closing remarks for this call,
Yeah, let's let Chris get some sleep. I want to say thank you for having me. As always, it was a lot of fun to talk things through. And if it wasn't obvious to all of you beforehand, Chris and Jordy are both brilliant and also members of Twitter. So thanks for participating with me, and talk to you guys soon.
Same.
yeah,
Appreciate
well,
the platform. Oh, go, Chris. My bad.
I just want to say, Brad, you're brilliant as well. And could you explain something? Sleep, what is it?
Chris is up to like polyphasic sleeping at this point. Sleeping every 30 minutes, every couple hours. I don't know. But yeah, no, I echo the sentiment. I mean, everyone here, Brad, Chris, Max, you guys are brilliant. And the opportunity to have a platform like this and just connect with you three and the audience at large, it's something I'm grateful for. And I hope that this conversation adds value to everyone. And don't feel free to hit me up or anyone here. You know, we all want everyone to do well here. So appreciate the time.
yeah, thank you so much, guys, being generous with your time. Thanks for all the listeners. Chat with you later. Thank you, guys. Take care.
Bye.